Thursday, May 4th, market analysis. Stan Ehrlich, good morning. 10:15 California time, and we have further downside progress, getting closer to closing some gaps I've been talking about for, well, a couple of weeks plus probably. And we always start out with the stock market indexes, typically the S&P 500, like we're going to do again this morning. Okay, we gapped down a little bit this morning. For those of you who are not sure what a gap is, that means that the current day's high, for example, today, is below the low of the previous day. So there is a price range where the market hasn't traded in relative to the previous day and today combined. Now, gaps are almost always closed, and as a result, the gap that's down around 396, 397 area, I think is on its way to being closed. We have left a small gap above today's high, and 2 days ago, we left a small gap above the market also. So that's two reasons to go up and close those gaps, but I think it's going to be after we go down to 396, closing the bigger, larger gap. Not that that's particularly important, but it's just simply a little larger than the other two, below the market. And that would be in the ballpark of a fib retracement, probably, just eyeballing it, and would potentially create an oversold condition as well. And I am very much interested in probably getting buy signals when we do, if we do get back down to 396. And it should be within a very short number of days. Today's Thursday, so I wouldn't be surprised if it was tomorrow or early next week. So I'm being anticipatory about a buy signal or buying opportunities again very soon, a little bit lower, 10 points from where we are right now. And that may take a day or two or 3 or 4 to get down there. Now, let's take a look at the DIA in the same light, and we find that there is a, sorry about that. And let me expand this daily data chart to full screen. Here we go. We gapped down as well this morning on the DIA. And also a couple of days ago, we gapped down slightly. So like the spider, the DIA has two small gaps now above the market. Again, one of them is just created this morning, and the other one only 3 days ago. Now there's that gap below the market, and we've closed a little tiny bit more of it on the break today, but it's not finished. But remember, I said gaps are almost always closed. I'd say over 80%, just 52 years worth of experience. So what about the gap way down here at 322? Well, that's pretty much a stretch, and I'm not sure. It's possible that that gap would be closed as well, but I'm not thinking that's going to happen in this particular instance. So I'm not forgetting about it. We'll see how it continues to behave. I am expecting slightly lower lows than today's lows in order to finish closing the gap that it almost closed today, but not quite. What about the QQQs? And then, of course, up after that. So I'm looking for a new bull move to start next week. The QQQ daily chart is a little bit different. We do not have any gaps above the market that didn't gap down today. It's actually higher on the day by 50 cents at this moment. Another tiny little gap that was left behind on April 26 and 27 was almost closed. I'm not sure, but that's good enough. And as a result, there's no particular incentive real close by for another break. But There is a gap still even lower, and I'm expanding it to the future here, and I need to drop the bottom down a little bit. There you go. So I'm not ruling out 308 and a third on the QQQs, which is currently 1770 at the moment, 317.70, as a gap that may still get closed. So looking for a break, gap closures in general, and then hopefully some buy signals. I may not get the buy signals. It may simply just turn around and start to head north. There could be some oversold condition accompanying that exact situation and timing. That would be great. Let's see what happens here in the next few days. Futures. So I have some new stuff to talk about here. We're going to start out with the spider again, the E-mini. It's the same commentary as I have on the SPY, but remember the trading hours are different, so you're going to get sometimes some different signals. Bottom ballpark situation here is looking for a little bit more of a decline and then a move back up again. There's no gaps per se to close. There's just a variety of support levels below the market. Next chart is 10-year notes. Look what happened here. We ran up again this morning substantially, right smack dab up against resistance. I've got an extra line here at the highest high in the last couple of months that I added this morning. The other line has been there for a couple of several weeks. The one I'm on top of right now at 116.25 or so, 23 or so. And that one was broken again, the fourth time, but so far the market's not been able to close above that level. If we can, it may even be the same day we're going to be closing a new high ground for many months. You got to go back to September to get higher highs. If we start reaching 17 and closing at 117 or better, that would be considered a major upside breakout, and this is the 10-year notes. What about the bonds? Well, I'll get to the bonds in a minute. They're out of sequence here for the moment. Corn, bullish engulfing yesterday, classic buy signal. It's my ER automated trading system. We came down this morning to those green dots, which is my buy level for an ER3, got filled and turned right around and headed straight back up, and now we've made new highs since yesterday's bullish engulfing signal, and we're higher than previous day's close, and I'm looking for this market to continue up right away, at least to say 602, and maybe significantly higher than that. But let's get the ball rolling here. It looks like it has started. I got no problem with the way this is acting. Next chart is lean hogs, live hogs. We got the bottom on April 21st. This is a little correction. I'm expecting it to turn around and start to head north again. Pardon my cough. Excuse me. There's a possibility of a head and shoulder bottom. We need a little bit more time to develop the last shoulder, but it shouldn't go down anymore. It should go sideways a little bit and then start to head up. I'll draw on the details soon if the pattern continues to act good. For the moment, I got to see it start to turn around and go back up. Next chart, sugar, the sweet, overbought conditions. They're being alleviated by a downside correction. It's a heck of a bull market, but it got way overbought, much more so than normal. And that could develop into a significant top. I'm waiting for some more technical help here as to whether this bull market's still good, or we may have turned a corner and started something bearish. So I'm waiting. Next is OJ. Very similar type of commentary. Not doing too much lately. No comment, frankly. Next chart is bean oil. Yesterday, we had a bullish ER buy signal almost at the bottom of the move. Today's low is almost at my green dot, and it's starting to move back up again. I like what I see. It's acting correctly. ER1 is always in the market if there's a green or red bar. And if it's green, it's long, and if it's red, it's short. This green bar, we picked the low right there, fantastically, 12-12-22. Not too many other signals at the moment. This one could turn into a really good one. I like the way it's acting, and I like the position that it's in. So turning bullish on soybean oil, next chart is bonds. Now, the bond market hasn't yet popped up into new high ground or attempted to break the previous rally highs, but it is up a little on the day, and it looks like it's an outside up day at this particular juncture. So as long as it stays higher than the previous close, this could be a bullish engulfing. It's not overbought, so I'm not in danger of it turning back down, and this little bullish engulfing could help catapult this into new ground, high ground. So I am expecting interest rate futures, 10-year notes and 30-year long bond to be building long-term major bottom formations and waiting for definitive signals to help me. In the meantime, bullish, looking for major breakouts. Next chart, crude oil. The energy group is very significant these days. Heating oil, crude oil, unleaded. We've got bearish activity going on in a general sense. Now, because we're oversold, even though we made a lower low for a long period of time, I'm frankly expecting this to flatten out or rally a little bit, but the trend is down. We broke a support level. We broke previous lows. And just because it's a little higher on the day at the moment does not necessarily mean that this is any kind of a major bottom at all. It may simply pop back up a little bit and then start to trend lower again. So momentarily, I'm a little bit friendly, but really in the next week or 2 or 3, I'm looking for lower lows. Next one is heating oil. It broke that major support area I talked about for weeks and weeks and weeks now, months, both of them. The other one, the red one, I drew in the red color. It used to be green until a couple of days ago, and now it's just kept making lower lows. But again, it's oversold. Don't go selling short something that's oversold, because they can turn around on a dime or even a penny real quick, and then gap up, and then you're stuck with being in a short position that you had no chance in order to eliminate a losing trade. So wait, probably going to bounce back up to the red line, and that might be a good place to go short anytime now. It may even be today, although I think it may take a day or two. But I would be interested in that. Next chart. Natural gas, another energy. The natural gas is trending lower, broke support again, and so far not doing anything particularly aggressive, but drifting lower slowly but surely, looking for lower levels. Next chart, we've got gold, silver, and platinum. Now, you might remember that we picked the gold market bottom back in February, all three of them, gold, silver, and platinum. So has that bull move spent itself? Apparently not. We just made another new high today, but it's overbought. Is this building a top? Well, it's certainly not, and now I'm going to erase those little arch marks because it's not a head and shoulder top. I thought it might be for a day or two, but it's not acting that way at all, so I'm erasing all the necklines as well. So this is now back in a bull mode again, but the way it's been acting for a month or two is a little bit concerning, and now we're overbought, so it could slip back down a little bit. Breaking below this 1979 area, that may turn it bearish, regardless of anything else. So I'm watching carefully for some top. Meanwhile, I wouldn't go long. It's overbought. Don't do that. Next chart is silver. Again, overbought and smack dab up against the previous rally high, which was a bearish engulfing ER sell signal. So far at the top of the rally, this looks like a setup for a potential double top. Could be very, very interesting here in the next day or two, or hours for that matter. Next chart is platinum, and we got the bottom of that market also back on February 27th. But we recently had a bearish engulfing sell signal, which has been working great and still is. So platinum starting down here by itself with silver and gold acting the other way around at the moment. But gold and silver have bearish attributes to what's happening, even though they're strong. Platinum is just simply making a new low and a probable new low close for about 2 or 3 weeks. And we've got an ER sell signal as well 3 days ago that is acting great. All right, next chart is live cattle. We got almost the top of the market with our ER red sell signal. We've seen new lows to move down since then yesterday, and today's an inside trading range day. So it's a I've forgotten. It's a candlestick that means uncertainty. It'll pop back in my head later. Neutral momentarily, but bearish expectations definitely. Next chart. High grade copper. Looks like it could drift a little lower. We did get oversold a few days ago. It rallied as a result. Now we're challenging those lows. I'm neutral to a little bit bearish on high grade. Next chart is soybeans. We had what looked like a great buy signal a couple of days ago. In fact, it did work for a day and a half or so. But that was a day and a half ago that it had an outside down day, and that started to ruin the bullish engulfing buy signal. Yesterday, we made a lower low, so that kills that. But please remember that these signals sometimes come in clusters of 2 or 3 or 4 in a month. Although that's not super common, I've seen plenty that cluster like that. So let's see what happens. I think this is a neutral situation to maybe a little bit friendly. We've got support it's trying to bounce off of. We've got a fairly nondescript longer-term trend, big sideways trading range, of which we're sort of at the low of. It's just not very clear at the moment to me. Next chart is wheat. Yesterday we got a bullish engulfing, and we are up again. This is great. ER1 is long from yesterday. ER3 just missed by a hair at the low of the day today. We are currently higher on the day and up 6.5 cents. Looking good, no problems. I'm expecting at a minimum a move up to 672 to test that resistance level. That is pretty likely in my opinion. As to whether it's going to be able to get all the way back up into the 628 area, that's a little less likely. But momentarily, I'm bullish. Now, what's the trend on this? Down. So you shouldn't expect necessarily any fantastic bull move here, unless you've got other reasons, and you might, to believe that the price activity and the price levels of the last 2 or 3 days are particularly importantly longer-term bullish to you as an individual because of your experience and knowledge about what are we doing wheat. So that can happen. It does. But I'm a technician, a technical analyst, and I can be friendly here up to resistance immediately. Next chart is soybean meal. Oversold again, chewing its way down. We have a lot of support below this market. The long-term trend is still up. I know we broke a bull trend line. That's not necessarily the kiss of death for a trend, but oftentimes it is. That's why we draw these lines. So I think we're going to bounce off the support area that's testing a second time just in the last few days and rally up into the area of at least 345, 45, 349, 50 maybe. And then we'll see what happens after that. So slightly friendly short term, but iffy longer term. Next chart is cocoa. Long-term trend is obviously up. And we're starting to rally again. We got down, but not oversold. But trend is your friend. Let's see it rally up a little bit more. Next chart is back to our E-mini, S&P 500. That's it for this morning, ladies and gentlemen. Tomorrow's Friday. Have a great day. See you tomorrow morning.